Hello, everyone. Since the beginning of 2019, Tesla has been coming up in our study. And the reason for that is that the company has a secret asset. It's AI and intellectual property. Of course, they own the intellectual property that was built around all of this infrastructure. We believe the company is undervalued because most people only see it as a car company or one with low current margins and profits. We do know that many good projects are being worked on, such as robo-taxis and robots. Credit markets are very tense right now, which is clear in the market as a whole. This is where CR really shines. Tesla bonds have become less strong, and I have some questions about how well they're doing. But their CEO is very charismatic, and their customers are very loyal, so I think Tesla will be fine. It has turned into something like the Missouri stock in that buyers want to see some action before they feel safe. But now is the time for people who are really optimistic to buy because the stock has dropped a lot. When I think about 10 years from now, I think Tesla could become overall growth is around 8%, and I think that things that make growth stronger, like the need for homes and consumer spending, are solid. Even though everyone is scared and nervous, and there is some global risk, I think now is a good time to buy stocks. If you're thinking about the long term, now is the time to spread your stock risk through granting shots. The ETF is based on the study model we used at Fundstrat. It was a core stock portfolio with themes that we used from 2019 to present. Every year for 6 years, we looked at 7 themes that we thought were important to the market and found the stocks that were most linked to them. These themes could be AI, millennials, Fed easing, or our Ganny shots. The name Ganny shots comes from the way that Hall of Famer Rick Barry made free throws. Tesla's amazing growth isn't just being watched from the sidelines by Tesla bulls and people who are always on the lookout for the next big thing in the stock market. This page tells you everything you need to know about Tesla. How much should Tesla stock be? What Tesla came up with and everything Elon Musk. There are affiliate links in the description. If you click on one of them and then buy something, our channel may get paid. I think investors should think of it as a core holding. The Granny Shots is a themed portfolio that buys the strongest stocks in a certain theme. For example, when you think of AI and millennials, Apple, Nvidia, and Tesla are really at the center of that. One thing investors should keep in mind is that small caps get hampered when investors worry about lack of visibility, like when the Fed starts to cut, and we've shown this to our clients. It has been linked to the IDOM doing better than the broader market as interest rates rise. In reality, the stock market is telling people not to invest in small caps until the Fed starts cutting rates. In the meantime, small caps have better earnings growth, close to 19% in the Russell 2000 compared to about 9% for the S&P, and the median P multiple is about 10 times in the Russell 2000 compared to 16 times for the S&P. I think this is a great risk-reward situation for investors right now, even though it means higher interest rates and higher borrowing costs. That's how things are now, so when the Fed starts cutting rates, things start to get easier. What investors would gain from is having exposure to things that are tied to things getting easier with money. This would actually make the case for small caps. So we have to wait a little while longer, but I don't know anyone who's made money trading this week. Does anyone have any great ideas? Small caps, especially those in the Russell 2000, tend to be very strong companies that control a smaller market. Investors may think that a small cap company is weak, but this is not always the case. That's why they're not a $1 trillion company yet, but soon they might be. This is partly because buyers have a lot to think about between now and early November, when the election is due. Like, the price of oil is high and the VIX is high. I want to buy a lot of stocks at once, so I think small caps still have strong strengths. That's almost 7 times less than the S&P as earnings growth speeds up. The average PE is 11 times. I still believe that small caps are starting to rise for a long time, but it's been a rough ride. In the past 6 weeks, the stock market has shown what it's really like, which it has done all year. This year, the S&P has been up 9 out of 10 months, which shows how strong it is. We were fooled by the time of year because I thought there would be a better chance of a turnaround between now and Election Day. That's always a bad idea, since we said in the same line that investors should buy that tip if it does go down. Though I believe we will still be in a tough patch until after the election, investors shouldn't be sad right now. I think we have a strong foundation. As an example, keeping the federal funds rate at 3% will help the economy and get home sales, car sales, and sales of durable goods out of a slump. This is good for both revenue growth and P/E ratios. I think this is a pretty good setting, but something bad could still happen. You could say caution is a bad word, but it shouldn't be. People should be ready to buy when prices drop, since this is the stock market. As you know, a lot of buyers and experts thought that as prices dropped, it would go up again. That would have stopped both earnings and sales rise. But S&P revenue growth is expected to be over 5% this quarter, which is over 2 plus 2%. That's one of the best numbers in more than 2 years, and it's been a great earnings season so far. Close to or even more than 80% of companies have reported earnings that were higher than expected, so it's been a good beat season. Last week, financials reported earnings that were better than expected, and they're doing really well so far this year. However, industrials are very sensitive to the Fed cutting rates, and there are a lot of reports this week, about a quarter of the S&P. Overall, I'd say it's been a good start. It looks like industrials are doing well, even though the ISM has been at rock bottom for 2 years. I don't think the market will peak because of a problem with PE or recession. I think it will likely peak in the next 6 months because either firepower is running out or expectations have become unrealistic about the markets. We can see which is true by looking at margin debt, which has been flat for 4 months while the market has been going up and most investors have been lowering their risk. That's good news for me to support this. The VIX was high and only returned to normal yesterday. As we all know, bull markets are based on strong fundamentals, and in this case, not only has the economy survived very high interest rates, but the Fed is also starting to cut rates. China's economy has been struggling, but now there is some stimulus and what looks like some bazooka policies supporting that region, and we have a lot of cash on the tsla. I think this is a good recipe for stocks to do pretty well over the next 3 to 12 months, which is why we think we'll be well beyond 5,700 before the end of the year. But do you know who else shares our optimism? Seeking Alpha is the best source of pro-Tesla news on the internet. To get the most up-to-date price targets for Tesla's offerings, click the affiliate link in the summary below. Elon Musk's new ideas and everything the Fed and the put will be in motion next week, which is more important. That could be the most important event of the month and give the markets a lot of support. People get scared and don't do anything, so I think we'll soon lose our presence. On the other hand, I think investors can be pretty sure that when the Fed lowers rates during a soft landing or no landing, the markets will do better for the next 12 months. Most of the time after 9 and 12 months. Also, we know that markets tend to go up after an election, so November.